It is your first rate decision as SNB president. How do you feel?
It's maybe my first rate decision as a president, but it's not my rate decision as a first rate decision as a board member or also an alternate member of the board. So it was a pretty almost business as usual with my colleagues.
For business as usual, you delivered quite a large rate cut. You went for a cut by 50 basis points, whereas most economists had expected 25 basis points, only a quarter-point move. Can you walk us through why did you opt for this larger move?
So in September, we hinted or we said that further policy easing might be necessary to ensure price stability in the medium term. And now we saw in the last quarter that inflation prints were below our expectations, and also the inflation pressure in the medium term was lower, and this led to the decision that we do this rate cut today.
And you have, in the press conference which we just listened to, you have said that this move, this bigger move, actually lowers the likelihood that you will have to go below zero, because the SNB right now has one of the lowest rates in the world. And that this actually lowers the likelihood that you have to go below zero. Can you walk us through that? Like, why does it lower the likelihood?
So our mandate is price stability, and we really want to have inflation in this target range for the inflation. And by lowering interest rates today, we have stabilized the inflation forecast, which also means that the probability of future cuts or cuts below zero are lower today than they were before.
You also said in your statement you changed your language, while in September you said that further rate cuts may become necessary. Now you're just saying that you'll maintain a monetary policy which is necessary to ensure inflation remains in the range of price stability. So is it correct to understand from that we will see less rate cuts in the future?
So with this rate cut that we did today, monetary conditions are appropriate again, and the next decision will take place in March. Then we will come together as a board and take a decision if we need to adjust monetary policy to maintain price stability.
Let's talk about the franc for a little bit. The franc has obviously appreciated a lot against the euro. It has it has touched a very high mark, like the highest mark in almost a decade. How much does that worry you that the franc is so high?
So the Swiss National Bank looks at the Swiss franc, of course, very closely, but we look at the situation as a whole, which means the Swiss franc effective rate. If you look at the Swiss franc effective rate, and even the real effective rate, the Swiss franc has depreciated since the beginning of the year.
And so it doesn't really matter to you? I mean, like, it's real exchange rates are one thing, but the thing we're seeing on the stock market tickers are the nominal exchange rates. So is there really nothing which it, it doesn't worry you at all?
So of course we monitor these markets very closely, but for us these appropriate monetary conditions are important, and also of course the Swiss franc and the Swiss franc against the euro especially poses risks for some firms, and we have a very high respect for the challenges that these firms face. But nevertheless, we do monetary policy for the whole, for Switzerland as a whole, and the step that we did today is the right one to ensure appropriate monetary conditions.
The SNB interest rate is now at 0.5%. You're only 2 quarter-point steps away from zero, so you're losing ammunition, as it is said. Does this keep you up at night at all, or are you just saying, well, if we have to go negative, then we just go into the negative territory with the interest rate?
So for monetary policy, it is really crucial to act decisively and early. To wait with rate cuts doesn't make any sense. This would mean that we have a monetary policy that is too restrictive for the moment, and this would mean that also we have to lower or adjust rates more in the future, and this can also then lead to volatility, and this is certainly not in the interest of a central bank.
In your view, how long are we away from taking rates below zero? How long are we away from negative rates?
So the Swiss National Bank and we as a board, we take decisions at every quarter. We can also meet between our usual monetary policy assessments, of course. And at these meetings, we look at all the facts, we look at all the indicators, and then we decide if an adjustment of monetary policy is appropriate or not.
You have said you can also meet in between the scheduled meetings. Does that mean that we might see an unscheduled rate cut?
Oh, I cannot do a forecast on this at all. It was just like to say, usually we meet every quarter, but of course we always have the possibility to move also, or to meet between ordinary or the regular monetary policy assessments.
One question, looking at the new president, which will move into the White House in September. The Trump administration, the last Trump administration, has brandished Switzerland as a currency manipulator because of your foreign exchange interventions. Are you afraid about that at all? Will this keep you from using foreign exchange intervention?
So at the moment, the new administration is not in office and the new president is not in office. When they will be in office, they will have their concrete measures. We will then, of course, have a look at these measures and then see if this has an impact on Switzerland. But, of course, we do monetary policy for Switzerland. We have the interest rate and we have the exchange rate. Our mandate is a domestic one, and we will also pursue this mandate domestically. Of course, the US is an important trading partner for Switzerland. And Switzerland, as a small open economy, needs open markets, needs free markets.
In the last period of negative rates, which only ended 2 years ago, we heard a lot of complaints about the negative interest rates, for example, particularly from banks, who said that this destroys their business model. Did you draw any lessons from the last period of negative interest rates? Is there anything you might be doing different now if you take rates below zero again?
One very important lesson is that negative interest rates worked. When we introduced the negative interest rates in 2015, it was to lower the attractiveness of the Swiss franc, and this worked with this negative interest rates. This is certainly the main takeaway from this period of negative interest rates. But it's also clear nobody likes negative interest rates. Also the Swiss National Bank, we do not like negative interest rates. But, of course, we would also be ready to implement negative interest rates again if necessary. But with the cut that we did today, the probability of negative interest rates has been lowered.
Let's come back for the final question, to the personal level again. It's not only your first interest rate decision as president, you also have a new board member in Petra Tschudin. And now on the board, you three are about the same age. How are you getting along? Is everything going nice? A comment on the new board, on how you're working together, please.
The new board has started very well. We started in October. But of course, I know Petra, and also Antoine knows Petra for a long time. She has been in the bank for a long time. She was also an alternate before, so she also already took place in all these decisions. But I can tell you that we as a board, the three of us together, have started very well.